The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien, Tommy O'Brien, and Darrell Martin.
Welcome, folks. Whoa, sorry about that. Welcome, folks. It's Tom O'Brien and Darrell Martin. We appreciate you growling and prowling with us out here. Right now, we get the Dow Industrials down 76. You get the Nasdaq off 28. S&Ps are off 13. Gold's down 15 at 1088. You got silver down 23 at 1475. We have oil down 35 at 35 cents. That is at $44.85. King Dollar's up 1,100 ticks, and we have action out here in a big way, folks.
Yeah.
Yeah! And, folks, if you haven't test drove the Nadex platform, great time to do it. Come over to our website at TFNN. You're going to see the banner on the top or on the side. You can hit that banner. You can bring it up, and they'll put $25,000 of paper money into your account. You can see how these contracts trade. And, of course, don't forget, every Wednesday, Thursday, Darrell's got a great show right here, 12 to 1. We do this show 10 to 11 every Friday. And, of course, once you get the platform up, come over to our website. Darrell's a great scanner that will help you decide what contracts that you would like to trade off of. Bottom line is that it's not going to tell you whether to go long or short. Strategy-wise, however, it will give you the best contract to buy or sell. What's happening, brother?
I just ate my croissants and made about $1,500 on Nadex. That's all I know.
I'm telling you, man, it's pretty intense. You know, out here this morning, folks, like I say, you get a couple different things happening. You know, I happen to always, I trade the NQs all the time, and needless to say, those NQs, you talk about a quick turn of events. If we go over and we take a look at this, what you'll see is that you had the jobs number come out this morning. Bottom line, the market was on a slow roll anyway. Jobs number comes out, it brings the volatility in the marketplace. Big jobs number, by the way, folks, okay? Brings the volatility out. You had the spike open out here this morning, and all it was doing, which is just a mind blower, man. It was like a gift for the trading gods. It goes up, it tests the high of this morning before the number comes out, and then gives it up on spades, you know, so.
That was awesome. I mean, it flew on up, and I mean, I'm looking at ice levels. I'm looking at, you know, deviations.
Yeah.
And, of course, all my, you know, my little concoction of indicators, whatever you want to call it.
Sure.
My brew, you know.
Right.
And so it flies on up. It hits settlement on the NASDAQ.
Right.
It basically hits settlement and then ice on Russell. It goes over and it breaks through settlement, hits upper ice on the Dow, and then all three of them start turning around.
Right.
And so I'm looking at, okay, where are we going to go next? I'm thinking, hey, it'd be nice if we could get down to the lower ice level. And so that's my first target.
Okay.
And we go down, we hit this red line is lower ice. So it's where we had the highest level, like 70% of the volume from yesterday.
Yes.
Is in between these green and red bars here, okay? And then the highest volume is that ice level right there, that little black dashed blue line. Anyways, so it comes up and comes on down, hits it here, hits it over here on the Dow. I'm very big on watching correlated markets because you'll see the ebb and flow. It helps you not get sort of smooths out the chart for you. You know, if I see like two of them going up and two of them going down, I'm like, okay, it's noise. If I see all of them starting to do the same thing, then that gives me more confidence on a trade.
Right.
And so I hop in on the Dow, and just did a small contract on the Dow, like a narrow one, because it's the only decent one I could find. But then I got a big wide one on NASDAQ.
That's right.
And so I got a big wide one on NASDAQ, and I rode that puppy all the way down. It came on down. It hit the negative 0.7 deviation level. We had Russell hitting 0.5, and we had the Dow hitting support levels. So, and just with all that happened at the same time, started to, really flat was making me really nervous, started to bounce up. I'm like, you know what? I'm almost maxed out on my Dow profit. So I'm going to go ahead and just take that one. And then the NASDAQ one was definitely starting to pull back. I'm like, there's no reason to give back all the profit. So, and To show you what I mean, like the floor of the Dow contract right here. Here's the trades I just took right here at the beginning of the show.
Okay, hold on. Let me go ahead. I'm sorry. I want to get yours up in front of me. Okay, I got it.
So I was looking at the 17,750 to 17,850.
Yep.
All right, I got in at 17,811 because at that point it was obviously really close to where the market was, and I'm right there in the middle. And then it came down. It was at 17,760 to exit. So there was literally, $10 more on 10. There's $100 more of value in all of these contracts combined, all 10 contracts.
Right.
So I was at 510 on a profit potential of 610. I'm going to go ahead and take that profit off. So I closed that one out first, and then NASDAQ over here. It was coming on down, and like I said, I started to see it bounce off 0.7. I saw this one bouncing off support, and then I saw Russell also starting to bounce off of its 0.5 deviation level, and so I went ahead and grabbed that profit. And yeah, like I said, not a bad morning. My beautiful wife brought me some croissants and sat back and just I'm like, oh, that's a good setup. I'll take that. And yeah, so very nice.
Yeah, there's no doubt. And what happens, folks, is that depending what contract you're grabbing, and that's simultaneously as Darrell's doing that, I was grabbing these on the NASDAQ. I was grabbing the 11 a.m.s.
There you go. Yeah.
And, I haven't closed the 11 a.m. out yet. We'll see, where that shakes out.
I think it's probably going to oscillate back down. So I just like to grab it down, and then when it goes up, grab it and grab it right back down.
The main reason, one of the main reasons I didn't close it out, because it didn't get, okay, so picture this, folks. I have the 80s to the 90s, okay? And so what happens is this, is that when I put it on, the risk versus the reward was pretty good, but I was 5 points out of the money, okay? So it had to come back inside 90. So when we're talking 46.80 to 46.90, expiration at 11 o'clock, okay? So first it had to come back inside the 46.90 to make money. Now, as that was happening, however, the price that I paid for that contract was expensive. I mean, I was at 87, so it had to get back inside 87. So that you're talking 8 NQ points. Now, 8 NQ points on a good volatile day is easy, okay? But at the beginning of the day, that might have not been easy, okay? But it worked out thus far. So the reason I haven't closed them out yet, Darrell, is that this only actually got down to 81.8 on the bid, not the offer. Do you know what I mean? So, so I get some risk here. I definitely have some risk here because I get 45 more minutes. Now, what will happen more than likely is that before we get off, as this time goes forward, if in fact we stay where we are right now, this will come down to like 81.5 or 81.2, and I'll take it off. So. And then I also bought gold this morning. I let gold go down. That was, this trading gold on this Nadex platform is awesome, man. I mean, it's sick. I just when the numbers came out, I let it go down there. I paid all of like 2 ticks, man. It's like, you gotta be kidding me, man. Darrell, you there? What's going on? Oh, okay. Okay, no problem. He's going to be right back. We had to get him hooked up again. No problem. Anyway, folks, if we take a look at the market in general, what you're going to see here is this. Okay, so we come back over to the. It looks to me, and this is going to be intense, folks, if this is what it is, that these 3 black crows are in place. And what 3 black crows are is this. They're so hard to set up, it's like crazy. What happens at 3 black crows is that you have a market, first off, that has been going up for a long period of time, which we had in place. Then what ends up happening is that you have a downdraft that's extraordinary, which we had. And this is the second time we had it, too, by the way, okay? When you go back in October, the last October of 2014 was telling you that, hey, this thing's going south. Bottom line, we went south. We blew out the lows. If you take a look at the S&Ps, we went to 181 the first time, October of 14 rather, 1.3 billion shares. Well, we blew those out with 1.6 billion. When you look back in all of this, it's always easier looking back. You don't want to be able to look back, folks, so you want to know where you are right now. Bottom line, you did 3 black crows on the way down. We rolled this week. If we get an expansion of volume this week, that brings the probability higher that you're going to go lower, and it brings the probability a lot higher that these 3 black crows are in place. A 3 black crow is not just a test of the lows, folks. A 3 black crow is a monster bear pullback. That's how those get set up. And you know, if you go back over in fact, at the break, I'll show you. I'll go back over whether it's 1999 or 2007. You know, I'll go back over those. The ones in '99 were incredible, man. I mean, and they came all the way back. If they love to get tested, that's the mind blower about a 3 black crow. You can't, in a common sense way, figure out how can something go up so far, get tested, and then blow apart again. But bottom line, that's what they like to do. We take a look at some of the higher volume stocks out here today in this market. Oh, hey, you got to check this out. This is what also happens at large pullbacks. Okay, so yesterday in the Wall Street Journal, right, had an article about Bill Ackman, Valiant, the CEO, all of the above, right? And, you know, when Tommy and I were doing the show yesterday morning, I says, oh, man, as soon as I saw that article, I just knew that the hedge funds were going to go after Valiant, okay? It was a lot of information in that article, information that it was public information. The reality of those is that they're going to go after it. Well, sure enough, they not only went after it, but check this out. What also happened, and this came out this morning, is that Goldman Sachs sold out. Well, they had to sell out. The CEO had shares as collateral in Valiant. Guess what? Sell them out. Bottom line, that's when you sell them out, folks, total loss. You stay right there. Darrell and I are coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here, folks. So check this out. So what I have up here, Darrell, okay, is that I'm talking about these 3 black crows and how these things set up, and they're very hard to set up. Number one, it's a council charting, candlestick charting pattern. Council charting and candlestick are the same deal, folks. So what happens is this. And what I have here is that what you're looking at is that you're looking at 2000, and in 2000, the S&Ps. Of course, the S&Ps topped out in 2000 in March, okay? That, if we look at the SPY, is 153. They went sideways for a bit, and these are the days, though. On the 12th of April, right, they went from 150.70. 3 days later, down to 133. That was an 11.3% move. Now, check this out. This is what's amazing, folks. They made it all the way back up, okay? So this is in April. They made it all the way back up, and what do? They get over it. They do 153.13, okay? And now watch what happens. You go from 153.13, and this is just a mind blower, man. When these things come to fruition, it is crazy. We go from 153.13 down to 77, okay? Intense. Now watch.
We have a tiger masking in the den. How to see the black crows?
Can you tell me where to see the current 3 black crows? Yeah, here we go. There, and here you go. The 3 black crows. Here's the current one. The current one is the 20th of August. The S&P, the SPY goes from 208 to 203.
Define a black crow for him.
Well, just give me a second, okay?
Okay.
So
Jumping ahead on you.
well, he's got to look it up. The next one is 203 to 197, and that's the following day, the 21st. And then the next one is the 24th, from 197 to 182. So if you just Google 3 black crows, you know, you'll pull it up. The key with the 3 black crows is to understand is that they love to get retested. We just did it. You know, so we'll see where that shakes out. And a 3 black crow, specifically what it means is that you're going down 3 days in a row, 4 days in a row, at approximately the same price span. Okay, and they're really, I've seen a few of them over the course of the last 20 years. And when they come into fruition, man, they are nasty beyond belief. And, you know, it was like, when it was happening, I remember a tiger calling and said, you know, it's the 3 black crows setting up. And I'm saying to myself, what happens with these folks is this. Is that when you're down that low, you say, man, how can it ever retest the highs again? Well, we just did it. And we did it. Now, when I put the art of time in the trade together with the 3 black crows, guess what? We did it with dramatically lighter volume. You know, so now, if you get an expansion with volume, that sets up that your probability gets much higher, that's what we have. And what, okay.
So now you're talking about us having a pullback down to the 190s there on the spiders?
Oh, no, it's heavier than that. So that's my point. No, so watch this. What the pullback would be, you'd get a pullback coming all the way down to like 130. Yeah. We're at 208. You're talking 130, man. Yeah, that's like insanity. Yeah.
Nice.
Yeah. So, well, we'll see how nice that is, but it is insanity. I mean, it's
nice to me.
I agree. It's a big heads up, folks, that, we'll see where it shakes out. But what happens is that you don't want to be in the situation that you look back and you see something like this, okay? What you want to be is you want to be ahead of the curve and understanding how, when these patterns do set up, you better pay attention to them, and particularly, if we get today, because this market is so deviant, it's so cool, man. The more deviant a market gets, folks, the better you should like it, because of the, like gold, okay, they whack gold, big deal. I mean, when I'm looking at gold, I'm saying to myself, you can whack gold all day long, and bottom line, all day long, I'll buy it here, because guess what, folks, inflation is going to be raging. I mean beyond belief, too, not just a little. What you're going to have here is that you're going to have, the Fed probably still won't move, So it's going to be wild watching this thing shake out. And you got to remember something. And this is where, if you are a fundamentalist, you already know this. The bottom line, doesn't matter where the rates go. What matters is that how much food's costing, shelter's costing, wages are costing versus what the interest rate is. That's all that matters, okay? Because we're in the funny money system, so. Let's go to Mike in Dallas. Hey, Mike, what's happening, brother? Oh, look at that. Man, I can't believe how quick things go. You stay right there, Mike. We're coming right back.
Okay.
Dow Industrials right now down 56. Nasdaq's off 13. S&Ps are off 11.5. Darrell and I coming right back, folks. You stay right there.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let falling markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the path of least resistance under trading newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The Dow right now is down 34. Nasdaq's off 6. S&Ps are off 9.5. We're talking with our man Mike from Dallas. What's happening, brother?
Hey, Darrell. Tom. Say, Darrell, I wanted to ask you a question on your scanner.
Yep. What you got?
And when I'm going long on a spread, we'll say NASDAQ, I'm going to try to buy lower than what the indicative market is showing. Correct?
Well, it depends on what you're trying to do. So it's an option. So there's a lot of different ways you can use it. So I'm trying to usually buy as close to the market as possible or with some positive premium. I understand when I have positive premium, which would mean that I'm buying lower than the market, that it will move slower. So I got to weigh my, my edge there.
Okay.
Is it okay to have positive premium and it go a little slower, or do I just want it to be as flat as possible? So like right now, you could buy the 14,670 to 4,700, and you could buy it 11 ticks lower than the market. Okay, which is good. I mean, entering 11 ticks, that's $29 in premium per contract. That's close. That's good. If I'm within 10 to 15 ticks, usually that's fine. When you start getting greater than that, like there's some down here, like this one's 23. That's a $58 premium. That's good, but it's going to move slower,
right?
On the contract. So.
Okay. All right. Well, that answered my question.
Awesome.
And I appreciate it. Thank you very much.
Thanks, man.
Okay.
You bet. Anytime. Thanks for listening.
Darrell, when were you just looking at that? This is the NQs, right?
Yeah, I was looking at the 4670 to 4700.
What time frame?
415, end of day expirations. Okay. So you choose the dailies on the scanner.
Yeah, I know, I'm with you. Right, okay, right.
It's too much work to do that platform.
Yeah, I know. No, I know.
Gotta click everywhere.
Yeah.
But the 4670 to 4700 versus the 4660 to 4700, both are the exact same ceiling.
Yes.
So this may want to, I'm curious if it would create one of those little opportunities like we had last week.
Yeah, I know that.
Is that what you're looking for?
That was wild, man. That, I mean, it didn't come out, but the bottom line, there was no risk either. You had zero risk. I had $2 risk or something. I mean, that was.
Yeah, I would have had zero risk. I mean, it played out as nothing. I lost $9 in fees, but
it didn't matter. No, exactly.
Yeah, it's like, who cares? I mean, if the thing explodes, I make money. If it doesn't, there's another one right now. So if you go in here and you buy this 4683.7.
4683. Yeah.
I'm sorry, 4600 to 4670.
I got it. Yeah, right in front of me. Right. Yeah.
Okay. And then if you sell the 4700 to 40, now there's some risk on that one. We'd have to flip it. Yeah, never mind. So it has the negative risk down here on the other side.
Here, let's go to Lou in Nashville. Hey, Lou, what's going on?
Hey, there's more leaves here than ever.
But you get beautiful weather up there. Get an Indian summer happening, right?
Yeah.
Sweet.
Sure, it won't last for long.
Sweet. So you want to step your foot in this water with the nugget? Is that what's happening?
Well, I wasn't adjustable this morning.
Let's take a look. So he's looking for the NUGT, folks, which is the direction, 300% bull position of the HUI. This morning out here, you get gold getting croaked. You have some of the equities getting croaked, but not all of them. So if you look inside, first off, the HUI, what you're going to have is this, okay? Because that is the NUGT. And let's see, okay. We're down 345. You're coming into 25. Look at that, 25.
Oh, I found another one of those little risk-free trades for you, by the way.
Oh, good. So 2360 is the low that was established out here on the 11th. Let me just pull up a few of these others, because what you have out here this morning, folks, is that, like, if we go look at Rangel Resources, GOLD, Rangel's down 250 right now. You're coming back into where the strength is. Put this on a weekly for a second. I'd wait till Monday, man.
Okay.
Yeah. You're coming into a monster bar. You know, like Rangel, you know, for the week is coming in with 4.4 million. You're coming into 7 million. But you know what? You don't, everyone hates gold, so you don't have to jump in there right now.
Yeah, okay.
You really can wait.
Yeah, I'll do that.
Cooking, brother.
Thank you.
Have a great one, man. Have a safe one. Now, if we go back over to, now this gets interesting, Darrell, because, you know, when I started the program out here, I said, yeah, I didn't close this. And see what happens, folks, when you don't close it? Now, watch this. I got the 11 o'clock, but guess what? Now this just went against me. That's pretty intense.
You talking about the Dow?
No, I had the NQs, the 80s to the 90s.
Oh, they were heading back up.
Yeah, no, this is serious problems, folks. Okay, so watch. You know, I mean, I get some time here, but the bottom line is that you know, I got a little greedy there. You know, It came down to 67. As they came down to 67, the bid was 468250, and I didn't want to give up 2 points. Now
that's where I closed it.
Yeah, and now that's a problem. You know, because now if it doesn't come back down there, that turns into, now this is where it's important to really understand too, that would turn into 100% loss, which is insane, okay? Now as 100% loss, my risk reward, when I put that on, was 1 to 3, was actually a little bit more there, 1 to 3.5 or something. So it's not the end of the world, but I want you to understand that, you know, bottom line is that at this point, that's not a good scene. That's what it comes down to. I expect, you know, we'll get more volatility. Now, in that case, however, I need that volatility to happen in the next 19 minutes. So,
because you got the 11 a.m.
Yeah. Well, I like those short ones, man. Those short ones, you know, what didn't happen on that short one, which normally does, is that they, you know, when you go 17 points under, well, it was 13 points under the market. Normally, it can get to, you know, 1.5 or something. You know what I mean? 8.
Right.
Well, what I mean by 1.5, folks, is 1.5 over the bottom of the ceiling, and it got to 2.4, and that probably, I suspect, you know, these option markets are always correct. What that is that was because the volatility was much higher, and the option market makers, that'd be everyone together, felt that no, that's the type of volatility that had to be inside that contract because of the market that we're in. So while just, you know, inside the NDX 100, the move is out here this morning is that NVIDIA is up $4. Monster Beverage, everyone must be drinking speed, folks, okay? Monster Beverage is up. Seriously, look at this thing. It's up $18, wow. Man. $18. I mean, they're selling some speed, man, no doubt about it. You have SWKS is up $4.91.
Binary traders buying all that up.
What?
Some binary traders buying all that.
Yeah, exactly. And Avco Technologies is up $7.28. Now, Skyworks and Avco, folks, both are Apple suppliers, so it's going to be intense. Now, taken away on the way down inside the NDX 100, you have TripAdvisor's down $8.49. You have Semantic down 83, and Kraft Heinz is off 291. Look at this market, man. The market made it all the way back. This is freaking amazing.
Yeah, it's been awesome. It's going down, going up, going down, going back up.
We look at this S&P again. Let me just
Get ready for a short. It's going to come. So.
Yeah, no. Okay, so look at this. Oh, this is pretty cool, actually. So watch, folks. Look at this, man. This is awesome. Now, what you have is this. So check this out. We have a high volume swing low on the S&Ps, the futures at 2077. So your probability is you're going to go right back down there again. You know, that's what you're always looking for. On this 10-minute bar right here, watch this. This is sick. Okay, it needs a lot more. We're 3 minutes into it, but you're going into 132,000 contracts. That is a monster, folks. Now let's go over to the NQs. NQZ5.
You want to check out this gold trade too?
Yes, absolutely.
I'll show you this one.
Okay, so right now, the NQs have done 100% move of the first move down and the second move down. And
I mean, this is like perfect trend volatility.
It is.
Swing trends, you know.
it is.
And they're smooth. They're not choppy.
It's wild, man. So the first move down took it from 47.08 to 46.72. You come all the way back to 47.04, and you go down to 46.58. Now, we just tested the highs again, so we'll see what shakes out here, because it's not going to have the volume. We'll get... No, actually, you get 6 more minutes left, so we'll see what happens in 6 minutes. That's a long time in this market, 6 minutes, man.
Yeah.
No doubt.
My trade lasted 21 minutes.
Yeah, totally. Mine should have, too. Okay, so
I've been there, man.
let's go over to this gold market.
Okay, gold market. This is sort of the same thing we were looking at last week.
Yep.
And it's one of those trades that I think I'm going to start playing this every week for fun.
Right.
Because I mean, if you hit one of them, I mean, in a year.
I know.
Okay, much less like, a month or a quarter.
Yeah.
You're going to bank. What I'm looking at 2 spreads right now, the 130 expiration.
Okay.
And they're literally 2 ticks apart. So my risk is $2 per contract.
Yep.
Okay. And what I do to look at it to say, okay, how would this work, is I need to sort of figure out, okay, where would I, be making money on the contracts? And so if I'm selling, okay, the sell would stop losing at the ceiling, right?
Yes.
So I put a little box over here on gold.
Okay.
1100 is the ceiling on the sell side. And then if I'm buying, it would stop losing money at 1075, the floor. Okay?
Yes.
So I have basically a 25 point box. So 1100 to 1075. So if it stays inside that range, which I mean wouldn't be hard for it to stay inside the range, obviously.
That's right.
Then in this case, I'm gonna lose $2 because I can buy one at 1086.4, I can sell one at 1086.2.
Right.
Okay. My risk is the difference between the two, because if it goes above the ceiling of the sold contract, so it's at max loss, then it covers all the loss on the short, and then the long keeps making money.
I know, man.
If it goes below the floor on the bot contract, it covers all the loss in the bot contract, and then it keeps going, keeps making money. And to go, well, is that even a realistic move? Well, if we just back up a little bit and just look at today, okay, we were all the way up at 1110 pretty much today.
Yes.
So if it went up to 1110, I'd make 10 points. I'd make $100 on a $2 risk.
Right.
If it just went back to today's highs.
You know what we should have done? That's what we got to know. We got to look at these before an announcement like this, because gold loves to move $20, man.
Yeah, if you can find it. Then,
Yeah.
I mean, you're right, though. I need to start looking at it like before NFPs and before FOMCs and stuff like that, and see if you can find a couple that, because normally you wouldn't look at it. They're not your natural, I call them the Siamese straddles, right? So sort of joint at the hips there.
Right. No, I know.
And so you try to get the same floor and same ceiling, and when you do that, you're going to have all that premium.
Right.
But we're deep enough in there, and for whatever reason, there's like little to no premium on gold lately. I mean, it hasn't had massive moves a whole lot, but
Well,
there's just not a lot of, at least on Friday, there's like not a lot of premium.
No, and I've watched it. I've traded enough just, directionally. and they don't seem to put the premium in it, even when it does move like this. Like, so picture, folks, okay? We had a $20 move in gold, and they still didn't put the premium in it, because when I bought it, I only paid 2 ticks. It's like, so big deal. So if it stays where it's at, great. You know, on a couple contracts, you lose $20. It's like, you know, and if you trade futures, folks, okay, you know, I like trading gold much better in the Nadex platform than in the futures platform, because in the futures platform, folks, you know, 2 points is $200 per contract. Okay, so it's like, okay, well, it doesn't make any sense. I'd rather pay 0.2 of a point for that defined type of risk. Do you know what I mean?
Exactly. And so I go in on this contract, and I put on a buy, I put on a sell, and the difference between my 2 contracts is $1.
Look at that, man.
Okay?
Right.
I did 10 contracts. So I have a $10 risk on the trade.
Yep.
Okay? Let's say if it just went back to today's high, all right? I'd make $100 times 10. I'd make $1,000 on a $10 risk. Now, I'm putting up more capital than that.
Right.
Okay?
Right.
So the capital I put, because I don't want people to go, well, I only have to put up $2. Like, no, I'm putting up more than $2.
Right.
But, you know, not a lot more.
And it's only.
I mean, I'm putting up a couple $100, but there's literally only a $2 risk. Because gold has to settle at a price.
Totally.
One price only.
Right.
And so when it settles, let's say it settles at 1086.5.
Right.
Then that contract loses $1. If it settles at 1086.6, that contract loses $1. If it settles at 1080, okay, well, that contract loses 165, and that contract makes, you know, 164 or whatever. So, I mean, it literally doesn't matter where it settles. There's only going to be a $1 difference in my profit and loss on these contracts as a negative.
Exactly.
Positive could be, I mean, you're talking $1 risk for $1,000, and there's more than $1,000 potential gain, but $1,000 gain if it just went to today's highs.
Amazing. Stay right there, folks. Darrell and I are coming right back. Dow Industrials right now flat. Nasdaq's up 5. S&P's are down 4.5. We're going to be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Darrell Rhodes, Tom O'Brien. We appreciate you growling and prowling with us out here. Right now, you get the Dow down 8, Nasdaq's up 3, S&Ps are up 6.5, and you can expect this volatility to continue all day long, folks. The real key is going to be, do you get to lower price, and do we have an expansion of volume? The ETF structure is absolutely going to have an expansion of volume. The real key is going to be, where do they close out at? Inside the NASDAQ composite, what we have is also a monster expansion of volume. We're already at 639 million shares, folks, on the NASDAQ, and that's the one to watch, because the NASDAQ leads on the way up, the NASDAQ leads on the way down, and if you get into lower price today, that's going to be a roll in the composite itself, and we'll see whether the NDX gets to close under the 114.39. You know, thus far it has rejected that lower level, and that lower level is an important level, because that would be a rejection of the July highs on a weekly with lighter volume. So all of the above. So next week, the bottom line is that we get volatility in the marketplace, and I expect those babies are going to continue. So,
yeah, that's what I'm hoping. What do you think we have that's going to help us drive that volatility next week? I mean, it was a slow week this week, but the money to be made was made today. You know, really?
Yeah,
the big money.
I think what's definitely in play right now is that, that jobs number was huge, and what you had inside the jobs number was more than just the jobs, folks. The jobs were created, okay.
But it's about the FOMC. That's what we were talking about Wednesday on your show, too.
Yeah.
And how they're looking at everything and the interest rate and all that.
And what has happened now is that the payroll also went up 2.4%. That wages are going up. So when Tommy and I have been talking a lot about inflation. I mean, my take is that inflation's raging, not just small. Once you get inflation into wages, folks, okay? You get GM, they want to go on strike. Ford wants to go on strike. Bottom line, you're going to see this going right through, because everything's too expensive. And you get that going, you get action. And that is what will drive monster volatility in the marketplace. Because if we do have inflation, folks, you know what's so cool about it is this. Well, we don't want raging inflation, okay? But what is so cool about it is that we haven't had it for so long, that you as traders, you can take advantage of this very quickly for a good amount of time. Because people are going to say, what does that mean in the interest rate structure? Like someone was just asking me the den, what's going to happen with real estate? Well, what happens with real estate is this. Real estate will be worth a lot more. Any hard asset is going to be worth so much more money, it's sick. And this is why. the inflation rate, if the inflation rate is over the interest rate, that differential is that is what ends up happening in inflation, and that rages forward. Now, the initial jolt from the rates, I expect, would hit everything. But that's where you want to basically stay calm and look at what is the mathematical equation inside that. And that's, and I'm just giving you, if you're around in the 80s, that's the 70s, that's how it works, period. It always has to do with what you can get money at, where the inflation rate is, what the spread is at. Real estate, when inflation was raging, man, all you have to do is, well, let's put it this way. Anything and everything that you sit on, what happens in inflation is that every single one of us want to get rid of our cash as quick as we can, because cash is worth zero. But it goes down. Cooking, brother. Have a great one, Darrell.
Oh, my gosh, it just flew by today.
Huh?
Wow.
I know, man. Amazing. Really appreciate it. You stay right there, folks. We get a lot of great programming coming up for you. Dow Industrials right now down 15. Nasdaq's up 1. S&Ps are up 7.5. We'll get this is going to be a replay next hour. Basil's in New York. Nico Page, Dave White, Steve Rhodes. My buddy self later.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.